CME Bitcoin futures hit a 2-year high, but options market data reflects investors' hesitancy. Bitcoin futures open interest at the Chicago Mercantile Exchange hit an all-time high of $3.65 billion on November 1st. This metric considers the value of every contract in play for the remaining calendar months, where buyers and sellers' shorts are continually matched. The number of active large holders surged to a record 122 during the week of October 31st, signaling a growing institutional interest in Bitcoin. Notably, the Bitcoin CME futures or premium reached its highest level in over 2 years. In neutral markets, the annualized premium typically falls within the 5 to 10% range. However, the latest 15% premium for CME Bitcoin futures stands out, indicating a strong demand and for long positions. This also raises concerns as some may be relying on the approval of the spot Bitcoin exchange-traded futures. Contradicting the bullish sentiment from CME futures, evidence from Bitcoin options markets reveals a growing demand for protective put options. For instance, the put-to-call open interest ratio at the FBI results to commit me money the goal, and he spoke the current 1.0 level signifies a balanced open interest between call buy and put sell options. However, this indicator requires further analysis, as investors could have sold the call option, gaining positive exposure to Bitcoin above a specific price. Regardless of demand in the derivatives market, Bitcoin's price ultimately relies on spot exchange flows. For instance, the rejection at 36,000 on November 2 led to a 5% correction, bringing the price down to 34,130. Interestingly, the Bitfinex exchange experienced daily net BTC inflows of $300 million during this movement. The fourth biggest inflow of Bitcoin to at Bitfinex yesterday was roughly $300 million. As soon as the inflow started, Bitcoin started to trend down, extremely bullish, significant sell pressure, and then Bitcoin is still above $34,000. As analyst James Straighten highlighted, the whale deposit coincided with the fading momentum of Bitcoin, suggesting a potential connection between these movements. However, the downturn did not breach the $34,000 support, indicating real buyers at that level. Bitcoin's latest correction occurred while the Russell 2000 index futures measuring mid-cap companies in the U.S. gained 2.5% and reached a 2-week high. This suggests that Bitcoin's movement was unrelated to the U.S. Federal Reserve's decision to maintain interest rates at 5.25%. Additionally, the price of gold remained stable at around $1,985 between November 1st and November 3rd, demonstrating that the world's largest store of value was not affected by the monetary policy announcement. The question remains, how much selling pressure do Bitcoin sellers at $36,000 still hold? And as demonstrated by the $300 million daily net inflow to Bitfinex, merely assessing current deposits at exchanges does not provide a clear picture of short-term sale availability. A lower number of deposited coins may reflect lower investor confidence in exchanges. Lastly, the cryptocurrency market has been impacted by increased returns from traditional fiat fixed income operations, while the once lucrative cryptocurrency yields vanished following the Lunatary USD collapse in May 2022. This movement has had lasting effects on the lending sector, leading to the collapse of several intermediaries, including BlockFi, Voyager, and Celsius. At the moment, there is undeniable growing institutional demand for Bitcoin derivatives, according to CME futures data. However, this may not be directly related to lower spot availability, making it difficult to predict the supply between $36,000 and $40,000, a level untested since April 2022.